Today, on this episode, this is a very good episode that we recorded. We are interviewing Roushel Eid. She's currently a nurse at a hospital in Northern California that I'm pretty sure she mentions. She is a unicorn in the sense that she still very much loves nursing, which we 100% support.
You can support something that you don't understand.
No, but it's great. She's loving nursing, but still found her way into doing some real estate investing. And she raises money, with other nurses for real estate deals. And she's helping fellow coworkers, some that love nursing, some that don't, passively invest.
That's it. Stick around. It's a good one.
All right, welcome to the Investing RN podcast. We're joined here today with Roushel Eid, currently a CVICU nurse in California and doing some big things in real estate. So we'd like to dive into that. But first, can you tell us how you got started in nursing and how you kind of got to where you are now in the nursing profession?
Yes. Well, first of all, thank you so much for inviting me to your podcast. I love connecting with fellow nurses, such as you guys, and you guys are doing massive things. So thank you for inviting me. So let me see. Before nursing is my second degree or second career, I took up psychology in college, and then I started working as a travel nurse recruiter, actually, in LA back in 2004. So I started doing the nurse recruiting thing, like I was recruiting for, I don't know if you're familiar, Colin, but Martin Luther King in Compton.
Yeah, it's got quite a reputation.
We were placing nurses out So Martin Luther King and USC, the county hospitals over there. So we were recruiting for all those hospitals. But anyway, and then I saw how much they were making, and I was like, hold up a minute, 1 second, let me review my priorities here. And then it just so happened that by that time, I think that was already 2008. So I did recruiting for 4 years. So 2008, the economy was starting to get shaky, and then travel nursing was, hospitals were not hiring any more travel nurses, and they were actually downsizing and everything. So that was my opportunity to go back to school. So I went to nursing school and did the accelerated program. And, a year and a half later, I have my nursing degree, passed my NCLEX. I was so lucky that I got a job almost immediately, but it was like, I think that cohort there were 1,000 of us, like 1,000 applicants. And I was fortunate to get hired. I started at the PCU at Sharp Memorial Hospital in San Diego. And then from there, I moved to UCSD and then now at Stanford. And it has been a whirlwind. So 10 years later or 13 years later, I'm still doing nursing and I'm loving it. It has its moments, it has its challenges, but for the most part, I love nursing. I love what we do. So there's definitely, Josh, about this CVICU, there's something about just getting there and saving a person's life and seeing their trajectory and getting better. There are patients who unfortunately don't get better, but we get to provide the dignity that they deserve in their last days. So, and I can go on and on about that, but I'll stop there.
Yeah, and CVICU and at Stanford, I'm sure you see extremely rare cases that most people aren't able to see and take care of. So do you get patients straight from surgery, right? That's your avatar of patient that you see the mostly?
Yes. So we see everybody from low risk cabbages to all the way up to very high risk patients who have been rejected from other hospitals. We get patients all the way from Hawaii who other hospitals won't touch, right? So we get very, very sick patients. And we have the ECMO program as well that started, I think, way back 2000, I want to say early 2000s. But now we've ramped up the ECMO program. And so we really, since then, we are pretty much their last resort, you could say that. So for those patients who really are finding that last hope, that last glimmer of hope. So we've seen a lot of stuff.
Yeah. So the ECMO program you mentioned. So when I was in CVICU, and this is not like anything to brag because I don't know, maybe Antoine can cut this out, but when I was there, we had an ECMO patient that was on ECMO for, I want to say 67 days. And at the time, that was the longest anyone had ever been on the ECMO machine. So I don't know I'm sure technology has gotten a lot more advanced in the last 10 years, but what type of, are you seeing people on them like walking around down the halls and stuff at this point, or what does it look like?
Yeah. So the longest patient we had on ECMO was close to a year, like literally, I think it was 2 weeks or a week up to the year when this patient was cannulated. But yeah,
well, there goes our record is gone.
Yeah, hold my dear Joshua. I mean, is it like, we did that because the family and of course the patient wants to continue on, but I would say it had a great result. Ultimately the patient passed away, but that was our record as well. However, for those who do well, yeah, we have patients who walk around. They're mostly, this is going to be technical, but mostly, the VV ECMO patients are the ones who can walk around and, with the help of physical therapists. And it's a team. Like there will be like 5 or 6 people with this patient when we have this patient walking around. So it's
from
intense.
The ER side of things, I remember when we'd get people coming into the ER and they'd be like, "Oh, we're going to start ECMO or whatever." It was nuts. There were like 40 people there around this trauma room, and I was always just like, "What is happening right now?" Like, and it was just, I was like kind of on the outside looking in, and it was a lot, but yeah. Can't imagine after that.
Yeah, we respond to CV codes is when like a patient goes south and they activate the CV team, and that's when we cannulate a patient into ECMO. We respond to the emergency room now, and I think that's now I think that's the path where healthcare is going. So when a patient codes, you go into ECMO if they fit the criteria, because that's basically their best chance of surviving is getting into an ECMO.
Can you just real quick, just for informational purposes, like, because I didn't know what it was until I got to UCLA, but can you just explain a little quick thing of what ECMO is?
Oh yeah, so ECMO is so there are 2 types of ECMO. I mentioned VV ECMO and VA ECMO. So this is basically machine. ECMO stands for extracorporeal membrane oxygenation. So we take the blood out of the body, oxygenates it into this machine, and then brings it back to the body. So for VV ECMO, we do that for patients whose lungs are in full ARDS, like full lung failure, respiratory failure. So we relieve the lungs of the work. So we do the work for the lungs. But they have to have a good heart. For VA ECMO, it'll be those patients who have failing heart and failing lungs, and we do everything for them. So the blood is oxygenated outside of the body so that the heart and the lungs can rest, and with the hope that it will recover. So sometimes some patients, we put them in ECMO to bridge them to transplant, for example, while we're waiting for an organ. So they'll be on ECMO, and then once we get an organ, they get transplanted, and then we get rid of the ECMO, and hopefully they go home to their loved ones. So that's pretty much it. So for those who codes, for example, for those who, we have to do resuscitation on them. So it's basically, they may not necessarily need a new heart, but they just need some time to recover. And that's what ECMO does. So rest the heart and let it recover. And then, hopefully in weeks or a month's time, we can get them off ECMO and their heart can function on its own again. So that's my spiel.
So that sounds pretty. No, we didn't do that back when I was in the unit. Is that on top of cooling them, or that's like instead of the whole cooling process?
Oh no, that's on top of cooling them. So cooling would be to preserve the neural function, right? So ECMO would be the heart function by itself. So we take over the function of the heart and the lungs if they need it. Yeah. super cool stuff. Like
Well, I was,
a lot of things that.
I was
Sorry, you
going to
were
say, I
saying?
was like, the way you explained ECMO, I can't wait for you to talk about multifamily. But, but I, but
Yeah, I'm equally passionate
I
about
was
these
going
two
to say, yeah, you're
topics.
very passionate and well versed. So yeah, I mean, that's a good segue. So what kind of now, obviously you're still loving nursing. I can tell just by hearing you talk about it, but, now you're also doing real estate investing. So how did you get into that?
Yeah, so actually, my husband and I. Okay, let me backtrack. So when 2017 was when I realized I was paying way too much taxes, and I was like, working overtime. It is, like it was the first time that I was actually making real money. So I was just like, wait, whatever opportunity comes my way to work overtime, I was doing it. And then I realized how much taxes I was paying. So I started researching on how the rich gets away with not paying taxes, and everything points to real estate. And so my husband and I, we started investing in single family homes. That was when we started. I think 2019 was when we actually bought our first duplex out in Missouri. Did not know anything. I was just, we were listening to podcasts, Bigger Pockets and all that, doing the Burr method. We got into a duplex in St. Louis. It was a Section 8. Did not know anything, like I said, so we relied heavily on the property manager. So fast forward, we were able to get another duplex out in Ohio, and then we started fixing and flipping as well out in Florida and Texas. And the reason why we were investing out of state was because California was way too expensive for us. So we looked into areas where there was lower barrier to entry, and that was how we were able to, like accumulate some properties. And then going through that, there were a lot of lessons learned for sure. So like long distance landlord is for us meant that we have to entrust the operation to somebody else entirely. We were not hands on, and so, like for example, that St. Louis duplex, it was Section 8. We really were not on top of things as we wanted to be because, first of all, we're not familiar with the area. Number one, and then number two, it is a very different demographic from what we're used to. So Section 8 and in that part of town. So we got rid of that property, and then we started doing more research, and then we found out about multifamily. And then the more we learned about multifamily and how the valuation is very different with multifamily, property management is also very different. Asset management is like an entirely different thing for multifamily versus single family. It made more sense for us to pivot to multifamily and just focus all of our efforts and our capital into building our multifamily portfolio. And so last year, we got into a mentorship group that opened doors for us. So we invested first like our 50K into a storage deal that's cash, that has been cash flowing since day one. And then we also started taking part in deals and finding deals for our partners, and then finding investors for these deals as well. So we started in July, so about a year and some months later, we've accumulated about 540 units, both active and LPs, and so that's in total. That's about like four deals on track to doing 5 deals in multifamily. And so it has been great. Like we've brought in nurse investors, physicians. Once the investors understood how multifamily is different and what the benefits are, they're like, most of the time they get on board almost immediately. And yeah, there's a lot of exciting things happening. So we're gonna get busy.
Yeah. So that's a lot of information we just jam packed in that last few minutes, but we want to dig into kind of all of that. So for one, like you mentioned, you started out in single family. That seems to be a very common theme of real estate investors, just because it's the lowest entry level. Like you have a little bit of cash saved, you can go buy a single family. But one thing that kind of pivoted us when we started in single family as well, and then moved to commercial, is I guess one of the more attractive things for me personally was like, if you have a single family, it's worth what the house next to it's worth for the most part.
Yes.
But in commercial, you can change the value of it depending on how well you operate it as a business. So that was one of the more attractive things that we saw, is that you can actually have a little bit more control over what it's worth, as opposed to just the house next door is worth this much. That's about what your house is worth. So is that kind of something that led you to multifamily, or did you see the path to a scaling faster? What mostly made you decide to go from single family to multifamily?
That is exactly, if there's one reason that brought us to multifamily, is exactly that. When we realized the math of, when we understood the math of multifamily, like value is equal to NOI over cap rate. When I understood that and learned to do the math, that to me makes so much more sense, because there were a lot of times when we had to walk away from the deal because the ARV didn't pan out or did not pencil out. And so we did not have control on that. Whereas in multifamily, like you said, it's how efficient you are in your operations, how much more NOI or how much more income can you bring, and then, or how little expense, or how do I say that? Let me rephrase that. How you can reduce your expenses, right? So if you can reduce your expenses and then you can increase your income, then your valuation is so much higher. And for me, it's easier to do rather than rely on somebody else's or rely on comps in order to get the value that you have. That to me, for me, that makes more sense to me in my head, because I'm a very mathematical person, very, like, you know how it is, especially in nursing. It's very cut and dry, like black and white, either this or that. So that appealed to me so much more than single family.
So you threw out a few terms out there that I'm sure most nurses probably are not going to know what they are. So let's go through and kind of talk about what NOI, cap rate, ARV, you kind of threw those terms out there. And for a lot of our listeners probably aren't going to know what those are. So if you want to just talk about what those are a little bit more detailed.
Yeah, sorry. Like I said, I'm very passionate about this, and I'm just going to throw out terms, but thank you so much for stopping me and clarifying that. So basically this formula, value equals to NOI over cap rate, is how investors look at multifamily or commercial real estate for that matter. And this is how we compare one property from another, because, like, for example, in single family, you compare properties based out on your comps, right? You map out the comps. So your property is worth it will be worth the price of maybe your neighbor, plus or minus. So as long as it's a like property. So in commercial real estate, there's so many factors that you take into consideration. How old is the property? How old is the building? The neighborhood where they're at. So in order to kind of like make a balance, I guess, is the easiest way to explain that. So we have this formula that we use. So the value of the property, how much the property is worth, depends on your net operating income, which is your NOI. And that is the income, that is the rent, less all the expenses. This is all the cash flow that you're getting, divided by the cap rate. So the cap rate is determined, again, by some factors: market, the economy, the geographical location, the condition of the property. So that formula kind of dictates the value of your property. And so as a buyer, right, like if you are buying an apartment complex for $5 million, for example, you can go back and look at the income of the property and then the cap rate, and you can talk to the seller logically and say, actually, Mr. Seller, your property is not worth $5 million. It may be worth less. And it is because you have the objective data, you have the income and the cap rate to talk about, right? To get to calculate that formula. And And so for me, again, it's a very number heavy, very mathematical, and very objective way of assessing a property or assessing an asset. I hope I answered that question in a kind of roundabout way.
No, you definitely did. So one of the things you mentioned was cap rates and how that's used to find the value for the property. So in today's market, so this is end of 2023, we're still in a pretty high interest rate environment currently. So how have you seen that affecting cap rates in the commercial space?
Definitely, cap rates have gone higher as interest rates have gone higher. So that means the properties have become cheaper relative to the income that they've produced. So, like for example, where I am here in California, back in 2022, 2021, assets were trading for 3% cap, and that's like normal here in this market because California is a very expensive market. It's a very high appreciation market, so we're looking at like 3.5 cap. 4% would have been a steal, right? So now we're actually seeing properties that are trading at 5%, 5.25 here in California. So as you can imagine, sellers are now, like especially distressed sellers, they're trading or they're selling their apartments for much cheaper price because they just want, for some reason, they just want to get out of the property. And I mean, it can be argued that the cap rates are not going up as fast as they should. But I think we're getting there. So yeah, like especially what's happening in the commercial real estate space with all the defaults that's going to happen, we are expecting the cap rates to go up a little bit more.
Are you guys ready to attack this market pretty soon here?
Yeah, attack.
I don't know, what else do you say?
Yeah. So so you talked about starting in single family. Can you kind of walk us through the natural progression of your investing? Just kind of walk us through, because you have however many 500 doors now. Can you talk to us how that went from one single family into what you have now?
Yeah, so our first property was the duplex that we bought in Missouri. It was a Section 8. So we held that for a year, and then we decided to sell that in the height of the market. So it just made sense to get rid of that property, and there were a lot of people who were interested, so we were able to get rid of it right away. And then so I think we bought that mid 2019, and then end of 2019 was when we bought our second duplex, which was in Ohio. Ohio, it's a lower income, but we were able to get market rent, market tenants. So we got that. We still have that. We have that property up until now. And then we looked at, so my husband and I, we decided, okay, we need to multiply our capital fast. And so we got into fix and flipping. We partnered with some general contractors that were referred to us out in Florida. We did one flip with him. He put in the sweat equity. We provided the capital. And then, we made $12,000, within, it wasn't a whole lot. I mean, it was $12,000 and 4 months out of that. So, but we went into that because we wanted the whole learning experience. We wanted to see how it is to flip. And then, so we did another flip with this contractor, but this was when the market turned. And so we decided to hold that and use it as a long-term rental. So we have a long-term rental there now. We're cash flowing $500 on this. So we're keeping that, and it is in Florida. So, we're going to hold that until the market turns again and we can dispose. So, with this, as you can see, we had to pivot a few times, and it's not unheard of in as an entrepreneur when you're in business, that sometimes you just have to change your strategy when the market dictates it. So now we're on our third flip in Texas, in San Antonio. Beautiful home, historic historic, what do you call that? Is historic neighborhood. Again, a lot of lessons there. I will never do a historic neighborhood again, just because. I mean, I knew that they were strict, but man, I did not know how strict they were. Like literally every little thing you have to get, like you have to get clearance, you have to get permission, changing the color of the exterior of the home. Like you have to get permission for all that. So, but we knew that this is such a high demand area just because it was a historic neighborhood. Again, we had to pivot, and we're now keeping it as a long-term rental. And so just because of how the market has turned, we were going to make, I think we were projecting like $80K. Had we been able to do the rehab on time. But then that extended, as you know, fix and flip. You can plan as much as you want, but certain things happen, and then we had to change GCs. I mean, everything that could go wrong in this property went absolutely wrong. So, and this is also, we actually credit this property for letting us go into multifamily, because it was just like we were fed up, like chasing after the GC and having to go through all this, right? Because it's more of an active investment rather than a passive investment that we wanted. So yeah, and so
I want to say those. So we have, or I say we. I have a cousin out in Colorado, and he had some sort of historic property that he was. I might be getting the story wrong, but basically, in the end, like these historic homes, they're so regulated that there was a house that was being renovated where they had to like take off the siding, and they had to use the exact same siding. They were not allowed to replace it with anything else.
Oh yeah.
So I'm sure that's not something I realized. Like these historic houses are so like precious to regulators and lawmakers that you have to be so careful when you're fixing them up and stuff.
Yeah.
So is that sort of thing something that you ran into?
Yeah. So one reasons why we had to fire the GC, the first GC that we worked with, was because he painted the exterior of the home without approval from the city, and then he painted it like a gnarly color. So I mean, so we had to, and then we found out that we're not supposed to do that. Like we're not supposed to, like whatever imperfections you see, like even if like there's some cracks or whatever, you can maybe repair it, but you cannot replace it entirely. So yeah, so those are just one of those things. And then like you can change the door or the door color, like the front, anything exterior that would affect the appearance of the home is off limits. Like you have to get permission, and if they're going to even allow you to do that. So yeah. So that was definitely a 50,000 seminar for us, So we had to take off the paint. So this guy painted that experience, and it was a brick wall. It was the porous brick from the 1930s, and so we had to find a way to take off the paint that this guy used. And so we had to get like certified GC who is certified to work on historic homes, and then we had to find a way. So the method also has to be approved by the historical society. So we cannot sandblast it. So it was a nightmare. But thankfully, we found a solution. And we were able to get rid of the paint. So now it is restored to its original color, and it's much prettier now. So, so there's
How long
that.
How long did that flip go for?
It's running a year now. Like, has it been a year? More than actually, because we bought it in April. We're getting there. So yeah.
Well, hold the beer, Roushel. we did a 2-year flip.
Okay, so we're not quite in the 2-year
so we got one record back.
Oh geez. So yeah, so these are the things that like HGTV will show you. So like will really pull a wool over your eyes, because that is not how it happens.
Yeah, and I know you mentioned earlier that you joined a mentorship group or something, and that's something that kind of ties into what we're doing. Like Colin and I, we partnered on almost all of our deals. Well, pretty soon it'll be all of our deals. But trying to do this, if I had tried to do this all on my own, there's no way I would have made it this far, because it's everybody, all these gurus, they talk about how much money you make and how much wealth you build. They don't talk about all these stupid little problems that create such a headache. But with that being said, having a partner to bounce ideas off of, to voice frustrations to, and well, there's my sister as well as part of our partnership. But that's so essential in wealth building and in growth. You need to have partners, people that can pick you up when you're feeling down.
Mm-hmm.
So talk about your mentorship group. Like what did that look like, and how did that kind of boost your trajectory?
Oh yeah, like to your point, Josh, like you cannot really do this business on your own. You're right. Like you want to have somebody to bounce off ideas with, but also, I mean, I'm working full time. My husband at that time, when we first got our single family, he was in the Navy, so it fell squarely on my shoulders. But what I love about multifamily is that it's a team effort. Somebody's finding the deals, somebody's doing the underwriting, somebody's doing asset management. So it's really a division of labor. So it's you're not, like it's just not you. So as far as the mentorship, we joined Radcliffe's Lifetime Academy when I attended his boot camp in Colorado. And, I just love how he was able to break it down and really made us understand the business. And, like I didn't want to reinvent the wheel, and I just want to, I'm the type of person who wants to get down and dirty right away. And I thought, like, why not use other people's experience and leverage that, right? And at the same time, when we joined the mentorship, one benefit from that was networking with these individuals who's already done multiple multifamily deals and have already retired or have already walked away from their W-2, which we wanted to do. So it made sense for us to get into this group. And that was where we found opportunities where we were able to network and then go from one deal to another and just grow our portfolio from there.
Yeah. So what we were going to, one of the things we were wondering is like how you built this while you're being a nurse. It kind of sounds like that's how you did it with this mentorship group, which is awesome because yeah, especially as you're starting out, and even though you'd kind of done some stuff, to have that support's great. And it sounds like, so was the plan always to leave nursing, or just to supplement the income you were making in nursing and be able to cut back on the overtime?
Well, to be honest, I mean, nursing to me is just like I mentioned earlier, like there's really something about working with patients. I really enjoy that part. So if I'm gonna continue to do it, it's because I love doing it, and that's what my goal is to maybe if I still want to work because I want to, not because I need to. So I'm looking at building a portfolio so that it replaces my active income. And that way I can spend more time with my family, with the baby on the way, be able to be there during those most important years. But do I see myself still being a nurse? Absolutely. Like you can tell how passionate I am about talking about what we do, especially because now that people are getting sicker, our population, with advancement in medicine, medicine is getting more specialized. And I love that aspect of it, that we're able to bring in technology to help other people, to help the sick, right? So I can see myself doing both, but hopefully not the hours that I'm putting in now, because 36 hours a week it doesn't sound like a lot, but it takes a lot from you, right? Like you guys know this, especially if you're working nights, and I'm working night shift. So yeah.
Yeah, everybody always says, "Oh, you only work 3 days a week. How do you not have time?" And it's like, dude, like, okay, the first day off, especially if you're doing nights, is just a recovery day. The next day, you're basically still a zombie, and this is before you even factor in kids or anything else. So it's like that 3 days a week is not just 3 days a week. And when you are working, like that's pretty much all you do is work. So it's a tough gig, but it is great to hear. I think even just among the two of us, it's like Josh is still in it. I'm out. I think I was burnt out more on like the management side of things than the actual patient care. I always enjoyed patient care. But it's great to hear somebody like you who really is still passionate about nursing and still wanting to continue with nursing. But I think the key thing that you said is like making enough money so that you're doing it because you love it and because you want to do it and on your terms. And I think that just completely changes the way you view it and, your positive attitude going into work every day, I'm sure.
Yeah. I mean, how many nurses have you met where like they're coming into work and they absolutely hate what they're doing, but they have to be there because they have no choice, right? And you see how it trickles down to the patient, to the quality of patient care that they give. And so, I mean, there is a reason why, especially here in California, there is what do you call this? I know some hospitals, they don't allow you to work like 6 shifts in a row because some people do that. I mean, Stanford does, but other hospitals, they don't because the quality of care that you give diminishes. And it's not fair to those people who need the care.
So I'm going to go back to your whole group that you joined with Rod Cleef. Mm-hmm. So I've joined a couple of groups myself, and I find immense value. Like the return on investment there is it's huge. But I do want to talk a little bit about how you go in and you network. And as a new investor, maybe you don't feel like you have a lot of value to bring. And everybody always talks about like, oh, find a way where you can add value to somebody who's done more, so they'll become your mentor.
Yep.
So how do you kind of work your way into those conversations, and how do you actually bring value to somebody who's done so much and you're just trying to learn?
Before I joined the mentorship, I've not heard the word value used so much, like as much as when I entered the mentorship, and everybody's like, add value, bring value, and everything. And now I understand it. Like as you said, as a new investor, like how do you add value to, without any experience? How do you add value to some people who are more experienced than you? So I know as a new investor, like walking into this, that's how my journey was. I walked into the mentorship as a new investor, as a newbie, and I didn't think I know anything. I was like, I'm here to learn. I don't have any multifamily experience. But then as I listened to Rod, to our mentors, our coaches, there's always something within your skill set that nobody has. It's like your skill set and a combination of whatever resources that you have. So for me, it was, I have the resource of people. So I have a community of nurses that I can tap into. And then the skill wise, I mean, I'm not the best underwriter. I am the first one to admit that. I hate Excel sheets. So, but I love talking to people. So, that skill set and plus the community that I have is what I built on. And it took me several months to recognize that. Actually, it took me a little bit of, like soul searching and really some introspection, because I was like, no, I don't have anything. I don't have time. I don't really have a lot of money to put in. Like I only have maybe one minimum investment to make. Right. So, but then I realized, wait a minute, I have this community that I can use. And so that's how I was able to build another community, tapping into what I already have. So now when I have deals online, when we're capital raising for, an apartment complex or a new development, I go to my community, to my nurse friends, nurses that I know who are looking for another avenue to have another stream of income. So I talk to them and get them to invest in these deals. So now I realize from that I was able to launch my brand, the Cash Flow Nurse. And that is now how, like every Sunday, I now have a webinar where I talk about real estate and nursing and healthcare and all that. So it kind of tied in together. So answering your question, basically, what I'm trying to say is that I think each one of us has a skill set that is in addition to somebody else or somebody's need that you can fill.
So what? So you're still full time working as a nurse, and you're doing all this stuff on the side. Can you kind of walk us through what a typical day for you looks like? Do you come home and then you're doing real estate all night, or do you have a set schedule to where you make sure that you don't get burnt out? Basically,
Yeah. Not gonna lie, it's not easy. And I mean, I've been able to find like systems and kind of do. Actually, I have a VA that helps me massively with all this, so that's why I'm able to do a lot of the things that I'm able to do. So a typical day for me would look like, so if I work a shift, so I usually work nights. I have like a 2-hour window after coming home after work for calls, right? So for like, I don't know, networking calls or whatever calls I need to make to the investors. So that's Monday to Saturday. I have from 8 a.m. to about 10:30 that's dedicated for that. So I know that at that time, this is what I'm going to be doing if I have something scheduled. And then I sleep and then I go to work. And in between, my VA fills in. So whatever I need done, for example, like email blast or some email campaigns that need to be done, she sends me some drafts. I check them, approve them. She puts it up. She will email blast it, and then I take it from there. So I also have her reach out to people on Facebook, and then I will just have like people scheduling their calls. And and then so that's a typical day for me. On a Sunday is when I do my webinar. So I try not to work on Sundays, but sometimes I have to. So I'm literally like doing a webinar at 4 p.m. Pacific, and then I'm running to go to work at like 5:30. So I mean, it does, like it takes dedication. I feel it does take some effort, but with careful planning, and with help, thank God that I'm able to do it. But there are some days when oh my God, I just don't want to do another webinar, but I have to. So yeah.
That speaks to kind of everybody, all the gurus online talking about how easy things are. We have a joke. I'm sure it's not our joke, but I'm going to pretend that we made this one up. We didn't start real estate investing because it's easy. We started it because we thought it was going to be easy. So that's like a joke we have. But it's hard work, and you need people around you that are doing it, that can, as I mentioned earlier, that can pick you up when you're down and stuff, because it's a lot more work than I thought it was going to be when I first started.
I mean, but honestly though, like I chose to do that. My husband and I chose to be on the active side of things. We don't have to, like, we can just be passive, just bring in, like I work full time and we save up enough so that we can passively invest. And that's totally fine too. But for us, we find that being active for a short time. So our plan is to be active maybe for 5 years and just do this like 100% and just go all in, right? And then after that, we're just going to sit back and let our investment take over, because then by the time we're projecting, by the 5th year, we will be going full cycle on the deals that we have now. And then we're just able to kind of roll those capital over into another deal. And that's how we want to play it. And also, we took it upon ourselves, or I took it upon myself, to build a community called the Cash Flow Nurse, because I want to share this with other nurses. Again, I didn't have to, but I wanted to, especially, and we can talk about that as another topic. But, I chose to do it because I saw a gap and I saw a need to educate nurses about this type of real estate investment. And that's why I do the Sunday webinar, which is also like a lot of work, but again, it's a choice I made.
Yeah. Well, and that's kind of a good segue to like, your plans for the business. Cause it's like, obviously you're doing the multifamily investing for yourself, but the Cash Flow Nurse, and by the way, that's the cashflownurse.com is your website. Is that correct?
That's right.
Okay. And then we'll get your Instagram in a little bit too, so everybody can follow along. But the cashflownurse.com specifically, that's your platform where you're wanting to teach other nurses how to get into real estate or multifamily specifically? What's the goal there?
So the cash flow nurse is basically an educational platform for nurses to come in and learn about real estate investing. And this came into fruition, like I think, I don't know if I mentioned it in the beginning, but this is when we started doing multifamily, and then it was like right during the pandemic, or after the pandemic, I should say. Hospitals here in Northern California went on strike. So, like, literally 3 or 4 of the biggest hospitals in the area went on strike. And it is because the hospitals won't give us what we think we deserve. Like inflation was on the rise, and we need to have our wages increased as well. And what really affected me was the fact that I felt like we had to go on strike and beg the administrators to give what we deserve, so that we, after all this, the work that we've done during the pandemic, so that we're taken care of. So I was doing multifamily and I saw the need, and I was like, why don't I educate nurses to look at real estate as another form of investment for their retirement instead of going to 401k? And again, we can get into the nuances of 401k, why we don't want to just focus on 401k, why we want to diversify our investment. But my whole purpose was to educate healthcare professionals about the benefits of multifamily investing, right? So a lot of people didn't know that. A lot of people didn't know that when you invest into multifamily or real estate, that you get tax depreciation that you don't get in 401k. You get so many benefits that is not available from other investment types, like crypto, for instance. So the more I learned about how nurses look at their retirement, or how they manage their retirement, or what they're expecting out of it, the more I saw the need for education. And when I started educating nurses, I noticed there were some interest into knowing more about real estate. And so through the cash flow nurse, I was able to get nurses to invest in real estate and enjoy the benefits of it.
So you mentioned crypto. That's not really something I'm passionate about, because I like to buy crypto when it's talked about, which is, everybody knows that's the best time to buy.
Right?
But I'm not doing that anymore, just for the record.
See, like for instance, I mean, during the height, the height of it, everybody wanted to invest in crypto. But then I was like, I was asking people, like, what is crypto? Do you understand what it is? And nobody can explain it to me. I could not explain it either. So that's why I did not touch that. Maybe in the future, when I fully understand what it is or how it works and everything. But for me, I will not invest in something that I don't understand how it works. I don't understand how I make money. It's just, for me, it's a scary thing, to put my money in something that I don't know and I don't fully understand. And the ironic thing is, everybody, especially nurses, right? We have our money in 401k. But if you ask the average nurse, how does that work? Like, what do you mean? How does your 401k make money? How will it make sure that you have a fat retirement fund? They will not be able to explain it. And that is what I think, like, it's a shame, because nobody knows about the fees that they're paying, and all that thing. So yeah.
I think even for me too, like, I totally agree with you. The reason I love real estate is because it's like a tangible asset, and it just makes sense to me. Like, I was the nurse with the 401k that had no idea why it was making money or why it was losing money. And I was just like, what? Like, it just didn't make any sense to me. And even here on this podcast, like, that's one of the things we're really trying to do too, because it's like, as the investing RN, obviously we invest in real estate and we love real estate. But for a lot of people, like, crypto makes sense, or NFTs. I still don't know what an NFT is. Like, Josh has tried explaining them multiple times.
I know what it stands for, but that's as far as my knowledge goes.
So that's why we're just like, all right, we got to bring people in here that can kind of talk to all this stuff. Because even just something as simple as understanding your 401k and how it works and where the money's being invested and all that kind of stuff is so important. And I feel like it's there's just such a deficit of knowledge in that area for nurses, especially. But
yeah.
So we're gonna move to our last segment. We like to call the final four.
Okay.
It's 4 questions that we ask everybody, and the first one is, what's a top financial resource for nurses that you have found that's been beneficial to yourself?
Top financial resource. Honestly, I want to say the news. Just be abreast of, but that's also controversial because I wouldn't say the mainstream news. So, see, I listen to what's happening in the market from people who I know are in the trenches. So people who, like the brokers, for example. I talk to a lot of brokers. I talk to a lot of mortgage lenders to understand what's going on in the economy, and that for me will dictate how my husband and I move forward with our investments. So obviously it's based out of relationships, on networking, on like people you've worked with before. So yeah, like sure, I look at Bloomberg, I look at Wall Street Journal maybe, but I take that with a grain of salt because I found out that it's not always the whole story. So I go to people who are actually doing the deed.
Like that. How about, okay, so for number 2, what is something you would tell yourself as a new grad?
As a new grad nurse?
Or whatever.
Or I mean,
you can go back to the first degree if you want.
Yeah. Let's see. What will I tell myself? I would say find that one nurse that you would like to be and follow the footsteps. So essentially finding a mentor. And actually, and that's what I did. I mean, just a little bit of, like story time. As a new grad, I did not have any medical background, right? And then I went into an accelerated program. And if you have gone into an accelerated program, you know that you memorize stuff and you spit it out during a test, and that's it. Like, did I retain anything? Probably not. And so when I went into my clinicals, I mean, I literally remember my first day in clinical, I did not know how to use a thermometer. Believe it or not, like the red and blue. I'm like, why is there a red and blue? I didn't realize that the red goes into the other end. So it was a kind of thing. And the learning curve for me was so steep. But then I found this one nurse. I remember she was an ICU nurse that also worked as a rapid response nurse, and she would come like I literally would call her for every question that I had. So. And then as I was, as I was growing as a nurse, I always thought every time I had a question or I was second guessing myself, I always thought, her name was Amber. I was like, what would Amber do? Like what? So that's how I kind of got into the groove of things. And then fast forward 6 months later, I was more comfortable. I was more confident with my skills. And then, like, a year after later, I joined a committee and became a nurse leader and things like that. So I would tell myself to find a mentor like really early on, as soon as possible.
So that's really interesting that you had such a healthy childhood. You never had use for a temperature or a thermometer.
No.
So whatever childhood you had, we need more of that. So we'd have
just
less
those fancy hospital ones.
Yeah, I use this. I think we still use the ones with the mercury, the thermometer with the mercury.
I remember those.
That's what we used when I was a child. So I didn't know that there's a blue, like an oral thermometer and a thermometer for something else. So
yeah. All right. So the third question is, what's your big goal for the next 12 months? And is there anything we can do to help you get there?
Yeah. So a big goal for the next 12 months is to close on 5 more deals at least, that would cash flow and benefit a lot of our investors, that would bring massive returns. And I have no doubt that's going to happen just because of the market conditions we're in. So super excited about that. And you guys just keep doing what you're doing, spread the word out there and get more people interested in investing in asset classes such as real estate. That's huge.
So the fourth question is, if you were to tell people to do one thing right now, what would that be?
to do one thing, to create wealth.
Just what? Yeah, like one piece of advice. So the big thing is just like, one piece of advice, one thing that they could do right now to kind of change their trajectory.
So I would say educate themselves for whatever field they want to be good at, right? So if you want to lose weight, educate yourself on the correct way to do it. If you want to create wealth, find a way to, find a mentor or somehow educate yourself through podcasts, through books, getting exposed to people who has done whatever you want to do. I think that's the best way to achieve whatever your goal is. So I would say whatever it is, go ahead and find a way to educate yourself on whatever topic you want.
All right. So here's a bonus question. What is the biggest financial mistake that you've made, and what did you learn from it?
Biggest financial mistake is buying luxury goods that are not like those designer bags and designer shoes that in the long run was losing value. Had I known to save that and save early so that I can invest, I should have done that earlier.
Yeah, I can relate to that. Not myself personally. I have nothing. Yeah,
all of your designer bags.
I have nothing designer. Even my wedding ring, I think, was like $35. So not me, but my wife. She definitely, which is Josh's sister. She had a fancy streak. So.
Well, for girls, it's the designer bags. Yep. Sometimes we look at it as a status symbol. But for guys, I think it's the shoes, isn't it? Like you guys have
shoes.
Yeah.
Golf clubs. Yeah, yeah.
Designer watches. Golf clubs.
Yeah, I mean, this Apple Watch, I guess, is like a designer watch, but yeah, for us, it was
that to me is a necessity now.
Yeah, right. I know, but Mr. Lewis got the best of us, so we're we're good now. But well, yeah, this has been awesome. It's been great having you on. Anything else, Josh, before we do some closeout here? Right on.
Close it out.
Well, this is great. Thanks for coming on. Where can people find you? Just go ahead and plug all your platforms right now.
Yeah, you guys can find me on Facebook. It's Roushel Assumptions-Eid, but I think you can find me Roushel Eid on Facebook. On Instagram, it's Roushel_the Cashflow Nurse. I am also on YouTube, Roushel Eid, LinkedIn, but I'm not very active on LinkedIn, I have to admit. So the three main ones are Facebook, Instagram, and YouTube.
And then you have your website, thecashflownurse.com, which is where you do your webinars, or are the webinars on YouTube?
The replays are on YouTube. To register for the webinars, that's on my website. And also I have an ebook that is free for everybody to download. It's called Multifamily Investing for Healthcare Professionals. And it's like a 30-minute read. It's a quick read, but it kind of gives you the lay of the land on how to get started as a real estate investor and what the benefits are and all that. So check it out.
We don't know how to do show notes, but we have somebody that does. So we will make sure all of that is linked in the show notes.
Awesome.
Yeah. All right. Well, thank you.
Well, thank you so much for having me, you guys.